Memorial Day. We have a lot to go over, and the futures are open. So let's let these things settle down a little bit. We'll let people join in, and what we're going to talk about is obviously the futures action. We're going to talk about economic data coming out this week. It's going to be a big, big week because we not only do we have economic data coming out, we have a bunch of Fed heads that are going to be giving speeches and that will roil the markets. So we'll go over all that. And if you're wondering what stocks we like moving into the new trading week, mostly to the long side, as a matter of fact, everything to the long side, our 5 top stocks for the new trading week, I will share the link with you later on at the end of this video, if I remember, or it's posted on YouTube, and you can go check it out later on. So let's say hello to people. Lights. Evening all. Looks like Bob was correct in calling the market up this week. Okay, Tally, wise guy. It was a pool. Okay, pool update. So my pH is too high. I did not use my pool all week. Baking soda, throwing it in there, trying to get the pH level down. So beautiful weather here in New York. I did not use my pool. Maybe tomorrow. But it is improving dramatically. Thank you for asking. And hi, Larry. Talon. Hey, brother. Billionaire MAGA. Absolutely. Ultra MAGA, dark MAGA, you name it, we're it here. They're coming for your guns, folks. Canada, they're proposing new legislation to ban guns. You got that potato of a president of ours talking about 9mm. You don't need those size bullets. They're coming. World Economic Forum is over, and they are equipped with their marching orders. They are coming for the guns. Happy Memorial Day, all. Remember our veterans. Absolutely, Lewis. God bless our veterans. Happy Memorial Day. Let's remember the whys behind our 3-day weekend, unlike the Marxist scum that we have ruining this country right now. Falcon, hey, brother. Yoga Mac, how's it looking this week, Bob? Green light, red light, green light. I think that we're probably going to move up higher this week. But we can get derailed real quickly because of what a Fed head has to say. You also have Powell. I'll go over the article in a moment. Powell's going to be meeting with Potato Biden this week, so we'll see what the outcome is there. He can't blame Putin. I mean, he owns this inflation. Happy Trader Isaac. Happy Memorial Day to you too. RK. Good, take all the guns. I disagree. It's our Second Amendment right. They take away the guns. They come for you next. Look at Australia. They have concentration camps there now. Pete, hi. Welcome aboard. Okay, let's take a quick peek at the futures. The futures were open. I think it was an abbreviated session. Today, we closed up, and we are up at current, except coming off of the... Oh, this is a 1-minute chart. Okay, let's restart here. Okay. So we're off the highs of Monday, but we're still up on the session. The VIX, this is a 15-minute chart. The VIX is lower right. We have the VIX down, which makes sense. The dollar, I think this is a bear flag setup. And I think this is subject to failure. I think the dollar fails here. 10-year yield. 10-year yield is up. We're at 2.81. Let's go to the big charts. We'll go over the rest of the futures action. S&P 500. Again, we are up. It's a 15-minute chart. It's hard to say what's going on here, but when you go to a 4-hour chart, it makes more sense. We broke out here in the Sunday evening session. Consolidation, retest 1, 2, 3. We're coming in for our fourth retest of support. It's going to be interesting to see whether or not we hold this 41.72 mark. Let's stick with the 4-hour chart for a moment so we can get a feel for how we traded on Sunday night into Monday and bring ourselves up to date with the futures action rather than simply looking at a 15-minute chart. Russell 2000, 4-hour time frame. We had a clean breakout on Thursday, continuation breakout on Thursday. Friday, continuation move. A little bit of stalling action here. Let's pull back, see what the whys may be. And the why is simple. Overhead supply. So support from back here, resistance from back here, failed breakout from back here is now resistance yet again. So let's set them some alerts here. And let's take a quick look at the Nasdaq. We're going to see the same thing here. We have resistance immediately above. And we tapped it. We tapped it last night, and we're backing off. So, as we go into the new trading week, and this really goes to, I think it was Yoga Mac that posed the question. He'll bring it back up. How's it looking this week, Bob? Red light or green light? I think we have to say yellow light right now. Yellow light right now because what we have is clear resistance above. Let's keep in mind as well that we also have a lot of catalysts to go one direction or the other this week. If you get some dovish Fed governor that comes out, that'll be bullish. If you see economic data come out, which is bad, that's going to be bullish because bad news is good news, as sick and perverse as it is on Wall Street. So this support level's got to hold. So it looks as though what they're doing right now, consolidating gains and looking for another run at prior highs. Now, Bitcoin has had a heck of a move. And I did a TrendSpider presentation back in February. I keep bringing this up, but it's what I said was about to play out is playing out. And that is, I believe that Bitcoin would drop. I said it was bearish on Bitcoin. However, I've been buying it, dollar cost averaging in on Bitcoin. As a matter of fact, it's every Monday. So I bought some today and not a lot. And I said that after this risk event comes off, we see the risk off event decline. I think that what's going to happen is you're going to see money rotate into Bitcoin as inflation fears remain high, and especially now with the rise of the digital dollar. I'm going to go to an article in a moment that is concerning. We're going to be seeing digital dollars, central bank digital currencies happening a lot quicker than many people have expected. And where did this news come from? The World Economic Forum. So if you're wondering where our enemy lies, it's in Davos. Now, taking a look at the dollar, because now we're going to segue into commodities, because I think that the remainder of this year is going to be a commodity-based one, because when you get I kind of agree with this. Goldman believes that we have peak inflation. I'm going to go to a chart in a little while to show you the performance of the stock market going back. I think they have 12 occurrences going back to 1950, how the market does a few weeks out, 3 months out, 6 months out, 12 months out. It's pretty interesting stuff. So the dollar is in a downtrend channel, bullish for commodities. Now this doesn't even look like it's trading. Obviously it is, but there's no volume, zero volume. So let's take a look at the gold market. Now, gold, I'm going to go to a monthly chart in a moment. Gold needs to make a move, a big move in a real short amount of time. We have one trading day left to go in the month. And the monthly chart that I'm looking at, I have two of them. I'll go over both of them, but gold is a concern. But when I look at the 4-hour chart here and I look at the performance from last week of not just gold, but of the gold stocks and silver stocks, as well as silver, it's looking pretty good. So I'm not as bearish as I was this time last week on gold because it looks like it's turned it around quite a bit. And we are seeing a series of higher highs. Now we're waiting for a new breakout, and we need a close above 1900. And ideally by the end of business tomorrow. At or above it. That's wrong, Bob. Okay. So that will take some sort of an event for that to occur. But we are up on the session. I'm probably going to be looking to sell naked puts, more naked puts. I sold some last week on Nugget, NUGT, leveraged ETF. I'm probably going to look to sell more naked puts because I think that we're reaching the environment now where you're seeing the inflation rate over in Europe is at nightmare proportions right now. At some point in time, they're going to have to hike rates. And what that's going to do is send the euro higher and send the dollar lower. And that's going to be a bullish catalyst for gold. Taking a look at silver. Silver under a little bit of pressure here. We have broken down on a 4-hour chart. The same could be said for gold as well. But this is very light volume. So I don't want to be all doom and gloomish on what is definitely extremely light volume. Now, if Trader Isaac is on, you know we need to go to wheat. So let's check out wheat. I just had it up here too. Where is it? Wheat. All right. We'll find it. We'll go to corn first. Corn. We are down in the session, but this is a very nice consolidation. Very healthy. Very nice. Oh, and the 5 top stocks for the new trading week members, I put all of them. I just did it prior to the show. I put all the entry points, exit points, target price targets, etc. It's on the members area, in the members area. So corn looking good. Maybe now I'll find wheat. The pressure's on. Well, here we go. We'll go to soybeans first. Soybeans, big breakout here on soybeans. This is inflationary. People have no idea, really. Most people, I should say, have no idea how important soybeans are for the food chain. Very powerful. Let's go to a weekly chart. Soybeans are a buy. I mean, you take a look at a chart like this, you got to be a buyer here. You got to be a buyer. So uh, um, I'm less concerned about the pullback of late on the DBA. The DBA is a agriculture ETF. I think you're probably going to see a bid under that fund. That'll be a watch for us as well this week. But soybeans, I think you could do the Techtrium soybean fund if you want to buy soybeans outright. Let's go to wheat. I'll kick that off on a weekly chart to get a feel for it. All right, so wheat, a bit of a problem here. I think I mentioned this last weekend as well, Trader Isaac, that we're at a resistance level. And what happened last week was that we had broken out above resistance the week of the 9th of May. Bearish reversal bar the week thereafter, then last week, breakout point failure. So that's a concern. We'll probably retrace on wheat down to this lower band of support. Then you got to take a step back and say, okay, does it hold? All right, so you never want to see a breakout point failure, especially near the highs. So get your crayon out, draw your potential. I'm not saying it is potential double top. And I wouldn't add more to this trade until it begins to show some strength. Let's go to the 4-hour chart. Daily chart looks good. 4-hour chart. It's looking okay. It's limping up here. We broke out. We broke out in a 4-hour time frame. So you can see we broke out this morning. Oh, this is as of Friday. I guess I didn't trade today. They didn't trade wheat futures today. This is as of Friday. We broke out above resistance Friday afternoon, a pullback and a retrace, retest. Watch for a continuation breakout on wheat. All right, we're good there. What else do we need to go over? Let's check out the VIX. Let's clear this up. All right, so the reason why I'm focusing on the VIX right now is that I am not of the mind that this bear market, a correction, whatever you want to call it, is over. We have not had a blow off top on the VIX like we have had in other bear markets. We just haven't done it. So I don't think that this is over. I think that can we move up higher this week? Sure, absolutely. Volume last week was not great for equities. That's not going to prevent us from putting on good trades that are nice setups. I mean, you take a look at IBM. What's the other one? Lyondell Basel, LYB. I mean, those names have not really corrected whatsoever during this recent sell-off, and they are poised for a breakout. So I love those names. So very nice here on the VIX. It's consolidating, and it's at the lower end of the risk range here and threatening a potential move up higher. So keep an eye on this. Keep an eye on this. RSI rising. Let's check back in really quick with S&Ps. Still up 1/3%. Nasdaq still up nearly 3/4 of a percentage point. Okay. All right. Coming up this week, let's go to comments first. Uh, are shipping stocks back? China opens up, strong price. Yeah. That's a good point on the shipping stocks. Yeah, the Chinese, you saw a big move up in the futures market today due to the Chinese. You know what I didn't go to? Oil. I think that the biggest threat to the market right now is this chart here. This is a weekly chart of light sweet crude. We're up nearly 2%. So look at this breakout on a weekly time frame. We are closing in on all-time highs on oil. We could be there by the end of the year easily. So uh, we'll keep an eye on the shipping stocks, Trader Isaac. That's a good point. Coinbase execs sell $1.2 billion worth of stock in the first year. It's relative, right? It's how much do they still own as a percentage of their portfolio? How much do they still own? If they sold off the vast amount of their holdings, that means that confidence is shot. However, if they're still highly vested in the company, then it may just be automatic sell-offs, and they just a lot of times they just sell like they dollar cost average out of these companies automatically. So I'm not sure. It really has to be put into context of how much do they still own relative to what they've sold. Bob, how was volume compared to Thursday? Did we see? No, there was no institutional buying. Very, very light volume last week on the daily charts. So it, it was expected. You were heading into a holiday weekend. Thursday, Friday volume was clearly expected to be light volume. This is going to be you know it's going to be an abbreviated week, obviously, but volume should return to normal. Although for the summer season, it's probably going to die down on a relative base. Seasonality will come into play with volume around now. Uh, is it time to buy the VIX? I don't think so. Not yet. You have a lot of economic data coming out this week. Uh, and I would wait for a daily reversal bar where we closed, I think, at 27 on the VIX. And I would wait for a reversal bar. 27 is support for the VIX. All right. Thank you, Yoga Mac. Uh, thank you, Talon. Ran my mouth on Twitter. I'm in Twitter. You got banned on Twitter? You got in trouble? Uh, have we done oil? Just you probably asked that before and over oil. Oil is very bullish. Very, very bullish. Okay. I wrote about Elon is stealing the culture for billionaire honchos. Madmen. Let's be why you got it. Pat, hey Pat, happy Memorial Day. Expecting to continue this week on low volume. Could be. We're waiting for an event. We'll know when the rally is over, when we get that bearish reversal day, right? So I'm not going to pretend that I know the date that the market's going to roll over, but I'm confident that we're not done with the lows yet. Okay, let's go to. It's almost 6:30 already. All right. Price action in the futures, strong session. Why? China eases COVID curbs. So shipping stocks should bounce back. You can see the E-mini spiked on the news. So that was the context for why the futures were up, and probably some follow through from last week's bullishness. This coming week, we have obviously no data today. Tomorrow, Case-Shiller home price index. That's not going to move the market. However, you're probably going to see these home prices begin to come in. Chicago PMI consumer confidence, huge report. Wednesday, global U.S. manufacturing PMI, ISM manufacturing indexes, job openings, quits. Bet you that's probably going to drop down along with job openings. Construction spending, that'll be interesting. That's going to have a ripple effect through the economy if that comes in weak. Fed's beige book comes out on Wednesday. That can move the market. Thursday, ADP, the precursor to Fridays. They're reporting this a day later. It usually comes out on Tuesday or Wednesdays. But I guess because of the abbreviated week. Thursday's ADP employment report. Then we get initial jobs claims. Productivity. Watch productivity, folks. Productivity is falling off of a cliff. So you have productivity per employee going like this and wages going like this. And that wage spike is not keeping up with inflation. Unit labor costs, inflationary data, factory orders. Keep an eye on it. Core capital goods orders revision, not a big mover. Non-farm payrolls. That's the pimp Mac daddy of all economic data reports coming out on Friday. Watch average hourly earnings. If you see it rise, you may be saying, hey, that's a good thing. That's a good thing that my next door neighbor is making an extra buck in his paycheck every week. Not the way the Wall Street sees it. That's a bad thing. Even the Federal Reserve, that's a bad thing. That's inflation. So as sick as and perverse as it is, the markets will rally on weak average hourly earnings. One of the first things I realized in the stock market when I started learning about it many moons ago, ISM Services Index. So a chock full of economic data coming out this week. So buckle up. Okay, so as we proceed into the new trading week, this is the Shiller PE ratio. S&P 500, are we fairly valued, overvalued, undervalued? We're still overvalued here. We're more expensive this week than we were the prior week. So we're going into the new trading week at 32.52 on the Shiller PE ratio, the mean 16.95. Buffett indicator, we were fairly valued last week. We remain fairly valued. However, using the historical trend, we remain 38% above historical trend. That still allows for a serious sell-off in this market before we hit historical trend. So this is one of the reasons why I do not believe that this sell-off is over longer term, because we have not retraced back down to historical trend. And most of the time, the pendulum goes from extreme overbought to extreme oversold. So we have not gone down below into undervalued. So again, one of the reasons why I'm not convinced that this market is not done going down. Earnings trades. We stepped our toe back into the earnings trade game, if you will, last week. I had put a moratorium on it because of all the volatility in the market and stocks just puking all over themselves. We did make a trade on NVIDIA. And what else did we trade last week? We did another earnings trade. I forget which one. Both were profitable. We made money. We moved on. This trading week, we'll have Salesforce.com. We'll most definitely be involved with that trade. Hewlett-Packard, maybe. I don't know if the premiums are going to be there. I will not be trading names like GameStop. That's a lotto ticket. Not doing it. What else? What else do we have here? Lululemon. We'll probably trade that one. CrowdStrike. We'll probably trade that one. We usually trade that one. So these are the names that will probably be trading this trading week. So I mentioned earlier, European inflation. Where I want to take this conversation is to the dollar and to where we want to be placing our bets moving forward as longs. So the European inflation is just through the roof, on the verge of the public's going to rise up with pitchforks. So at some point in time, they're going to have to. Here's a chart of German CPI, and it is higher than our inflation, and this is what they admit to. So at some point in time, they're going to have to raise rates. Now, remember why the US dollar has been so hot the past year. It's been because, yes, Ukraine, but we're the only Western economy that's really doing anything in terms of raising rates. Everybody else is zero interest rate policy. Now, in real terms, we still have zero interest rates in the United States, but we're less worse. We're the least dirty shirt in the bin. Therefore, the dollar has been benefiting from it. Now, that's subject to change as the inflation rate in Europe continues to rise. And if they make a threat of rising interest rates, you're going to see the euro rip up higher, and you're going to see the dollar take a nosedive. Now, on Tuesday, this is going to be interesting. It appears as though the Putin argument, blaming Putin, no longer works, and Biden is feeling the heat. So Powell will be on at the White House on Tuesday. We'll see what that brings. There'll be definite demands put on Powell, but if he presses on Powell to fight inflation, well, then that means that the stock market corrects. If he pushes Powell to ramp up the printing presses again, that means that, the stock market's going to move up higher, but inflation is going to tear through the roof. So they're between a rock and a hard place. Other issues that are out there, and the World Economic Forum, I believe, is all done and over with, but you're seeing the fallout from it. MasterCard CEO, the SWIFT payment system may soon be replaced by CBDCs in central bank digital currencies in 5 years. So this is why I'm dollar cost averaging into Bitcoin and out of any dollar-based assets, buying physical gold, buying physical silver to get ready for basically your privacy just being ripped away. The serial number that you will see on your dollar bills now will be on your tokens in the future. You will have a carbon footprint. They are going to sell it to you as if it's a good thing. It'll make you aware of how much carbon you are emitting into the atmosphere, as, of course, the so-called elites or communists are flying around in their private jets, making carbon footprints making our carbon footprints look like nothing compared to what they're putting into the atmosphere. So get ready, folks. This is happening. This is a real thing. Contact your senator. Contact your representative. Scream about it. It's coming. They're going to rip away your privacy. Another reason why you're going to see the dollar weaken up here. China's doing it. India's doing it. Russia is doing it. Russia plans bond payment system like rubles for gas scheme to get around sanctions. They are doing it. So as sick as and perverse as it is, we're for all intents and purposes, the West is at war with Russia, but where the Europeans are buying their gas, but they're paying with rubles. So we're at war with an enemy, yet we're doing business with them at the same time. Only in this I don't know, this AIDS for mentality utopia that we live in right now would we be doing this. But I'm saying that we should have never gone to war with Russia. Ukraine should have just stayed neutral. I have zero sympathy for this Zelensky moron. I feel so horrible for the Ukrainian people because the Western elites, they will fight this battle down to the last Ukrainian. They will wipe out that entire population before they let this war end. So here's what we want to start looking at. Stagflation it's not coming. It's here. You're seeing the economic data fall apart. You're seeing inflation rip through the ceiling. Do I believe that there's peak inflation? Yes, on durable goods. What's a durable good? A durable good is your washing machine, dryers, uh, cars, etc. Those are your durable goods. Food prices, energy prices are going to continue to rip up higher and become a greater portion of your bring home paycheck. Where do we want to be invested? We want to be invested in areas that haven't taken off yet. Gold, silver. Those are my real hot and heavies. We talk about wheat here quite often. Crude prices are definitely moving up higher. You saw energy stocks break out last week, very strong. They've shown relative strength. They're showing no signs of stopping anytime soon. And what's this all doing to the US dollar? Here's a chart. The dollar on the month bearish key reversal bar. We are at the top end of the trading range. Now, what a lot of people don't appreciate is that while globalism is really falling apart at the seams, the World Economic Forum doesn't want to admit it, but it's falling apart at the seams. So the what we've done over the past 40 years is that while we've outsourced our manufacturing so much so that as the dollar weakens, the import prices are going to rise through the ceiling. So that's going to cause durable goods to drop even further. You'd hope that it'll bring manufacturing jobs back to the United States at some point in time, but that's years down the road. So the dollar at current is at the top end of its multi-year, if not multi-decade trading range. The path of least resistance right now for the US dollar is probably reversing and going to move down lower. Whereas if you take a look at the euro, bullish key reversal bar, the exact opposite of the US dollar. Even the Japanese yen, which we went long of the Japanese yen twice already, and we made money on it, bullish key reversal bar, up 2% on the month, whereas the euro's up 1.75%, and the US dollar is down 1.25%. So where do you want to put your money? I'll get to it. Before we do that, households worldwide wrecked by soaring gas prices. Here is you're going to see pitchforks in the street as this continues to get worse. Brazil, obviously the worst. The United States, we're on the chart. So inflation, energy ripping through the ceiling. As I mentioned earlier, German inflation ripping through the ceiling. As goes Germany, so goes the EU at this ECB. So if Germany demands interest rate hikes, guess what? They're going to be interest rate hikes. Now, I thought this was pretty interesting. What happens after the markets after peak inflation? I can't read tonight. Goldman answers. All right, so let's talk about this, right? Because all you keep hearing about is inflation on a tear. And it's year over year, no doubt about it. Inflation is on a tear. There's no denying it. And while we want to admit that, we also want to take a step back and say, okay, what's it doing on a month-over-month basis, right? On a month-over-month basis, it's getting less worse. It's coming in a little bit. Doesn't mean it can't spike up higher. I'm not going to say that we're definitely done with durable goods prices moving up higher. If the dollar corrects, guess what? Durable goods prices are going to move up higher because we import all that stuff. It's going to take more dollars to buy that stuff from overseas, which at some point in time, you'd hope that they'll build their manufacturing facilities here in the United States to make them more affordable. I digress. So let's talk about a chart that Goldman put out, and I thought it was really interesting, about what happens to the stock market as you move past peak inflation, this is assumption, right? We have to assume right now that we have hit peak inflation. We won't know until a year, 2 years down the road if we've hit peak inflation. But let's assume that here in 2020, we have hit peak inflation. They're using the standard headline inflation peaks above 3%. This is data going back, CPI inflation data going back to 1950. For those not familiar, CPI, Consumer Price Index. So what happens to the stock market after 3 months? Oh, this is 3 months before, 3 months after, then 6 months after. I didn't see this before. So 3 months after, the mean is 4.5% up. So we've already had a nice rally off the lows from the 22nd. If you're going to use that as your baseline from when we had peak inflation, okay, we've already had a nice rally, and this hasn't been filled in yet. We're already up. What did we do last week? Six and a half, nearly, let's say 6.5%. All right, we'll keep it conservative. So the median is 4.5%. So we've actually already moved above the historical 3-month median. Now, what I want to draw to your attention here is this. Take a look at this column here, 12-month forward PE. Now, you go back, and the last time we saw a PE anywhere in the range of where we are at current was back in January of 101. That was the sell-off from the dot-com bubble. So 3 months after, we were down 8.5%. 6 months after, down 11%. 12 months after, down over 17%. And here we're at. We've already surpassed the 3-month moving average. The question is, have we already gone too far, too fast? I'm not sure, but I'm posing that. I'm laying it out there for everybody to think about before they get overly aggressive to the long side. I'm going to share this out. If you want to refer back to it in the future, and the average going out, the median for 6 months is 6.1%, and 12 months is 11.1%. So we've really already come a good long way beyond the median. So let's be careful. I'm not saying we can't go higher here. Let's be careful with how aggressive we are to the long side. Simple as that. All right, let's do some chart requests. I go to the members area first. I should have done that before. Bad. Stock trading guru. Bad. All right, what do we have here? Okay, we got Thomas, Jim. Only Thomas and Jim. Oh, this is the first request I think I've had for Rivian. That's a good one. I have to take a look at that chart. I've been wanting to. So let's begin. FFIERIVN. DWAC. We sold that a while ago. I haven't looked at that in a while. That's a good one. And Boeing. That's another good one. Okay. I have ice cream coming at 7 o'clock sharp from Carvel, so I have to be off here so it doesn't melt. I purposely had a calorie deficit today so I can have my ice cream today. Trader Isaac, I'm going to take a look at that Zim. I see a couple of you out there are looking at Zim. I'm interested. Maybe we'll do some options trades on that this week. Avaya. Avaya. AVYA. Pete, what's the divvy on Avaya now? It's got to pay a divvy, right? Lewis, Boyle, Nat Gas, leveraged ETF, not for the faint of heart. Cal-Maine Foods, good one. We own that one for disclosure purposes. LABU, we own that for disclosure purposes. Didn't I go over those on the weekend commentary or skip them? Sometimes I forget. So if I did, I apologize. But I'll do them anyway. Because Lewis is the man. Patrick, you own BA? Well, yeah, well, you have I don't want to go into details, but I know you have history with Boeing. WLL. All right. Thoughts on GE? You got it, Paul. I miss Carvel. Who doesn't love them? Who doesn't love them? Pat, down a bit on Boeing. All right, we'll take a look at it. We'll take a look at it. It's been beaten to death, Pat. So as you know, I don't have to tell you. So I'm sure it's going to pop back up there. Yoga Mac, a friend of mine works at Rivian, and he sold $864,000 of the company stock in the past 2 weeks. So he was diversifying. I asked him if he's buying Tesla. He's looking into PMO. All right. All right. All right. Let's go over to, I think, TrendSpider, folks. Don't use my discount code. You could use the link, but don't use my discount code. Go over. They're giving 50% off for the weekend Memorial Day sale. And I was asked, am I giving a Memorial Day sale? I don't do many discounts, but for our fallen veterans, if you're interested, email me, Robert at thecontrariantrader.com. I'll send you out a discount code of some sort. I haven't thought about it, but I'll do something like 20% off, something like that. All right, let's get to it. FFIE. All right, monthly chart. Not a lot of data here to go with a monthly chart, but things are improving. You're in a wedge formation, weekly chart. This is a tough one. This is a tough one. We've already come close enough to calling this a tested support level on a weekly time frame. I'm torn here. Let's go to the daily chart first. I'll come back to the weekly chart. All right. So with this trade here, I think it's a chart that has obviously been through a lot of trauma and turmoil. And I think you need to be very, very careful and deliberate with this name, because if we see a resumption of the rise of the 10-year yield, a lot of companies out there, I'm going to assume this is a small cap. Come on, Bob. This is a small cap company. They're going to come under pressure, a lot of pressure. So what I would do here is I would be okay with nibbling on a position if it's going to be as an investment, as a trade. I'm not seeing it. I'm just not I'm not feeling it. I don't know if it trades options. If you're As a matter of fact, wow, they added so much on here. Holy cow. Yeah, they do have options. As a matter of fact, there's unusual options activity. So here's how I would trade this. They're not showing historical because this is a brand new company. That's why. I would think about selling puts on this at around, where do we close? Uh, Above $3. You want to go out, say you could do this on week to week if you really want the shares. If you really don't want the shares, go out a month. You could go out and sell the uh 250 strikes, $2.50 strike, and generate some cash flow, reduce your basis cost. You could, and if you really want the shares bad, sell a $3 put, drop your bid right between the mid-range between the bid ask, and that'll reduce your basis cost down to just above that $2.50 level. So you get the shares at a discount. You may never get them at all. You need to resign yourself to that. So what you may want to do now is buy a small position, because right now you're in the middle of a trading range. You don't know whether it's going to break out or break down. You don't know if the stock market's done with this correction yet. So you may want to be a little bit more tactical, a little bit more conservative, and just sell a deep out of the money put option, generate some cash flow. Now, if that's not your deal, that's fine. The other way to play this is this way. We closed above support at $3.11. Buy your stock, buy a portion of it, use a stop loss right below that $3.11 level, because if it fails to hold above it, then it's going to move lower in all probability. Then I would add more on a rally up and through $3 and let's call it 40 cents per share. Those confused about, I'm saying puts, isn't that a bearish position? No. Selling premium, selling puts is a bullish position, not a bearish position. We're option sellers here. We want to be the casino and not the gambler as much as possible. Sometimes we are the gambler, usually on earnings trades. All right. So that would be my game plan here. Nibble here, add more on the breakout, FFIE. I see a comment here about FFIE. Who just had a comment about FFIE? Talent. FFIE, my boss said that they're starting to build EV in our area. Gotcha. All right. So this is a big spec play, right? So if you love it, you got to own it. Okay, fine, buy the comment. But I think that you're getting paid some pretty good premium on a low dollar stock if you want to generate some cash flow as well. So pardon the pun, you have your options. Okay, let's move on. Rivian. We'll come back to the daily chart. Let's take a look at a weekly chart. Weekly charts stop going down. Now we've broken out. We haven't retested the breakout point. Let's redraw this. All right, so we broke. Yeah, we do have a retest. We do have a retest. So we broke out the week of the 16th, retest last week. We need to see a continuation breakout here on a weekly time frame. My guess is that we have a lot of shorts in this name. Three-month moving average data or volume is 22 million shares. Shares short. All right, so you have a couple of days worth of short covering rally here on Rivian. Nearly over 16.25% of the shares are held short. So this is setting up for a short squeeze. They have a ton of cash. How can they have $16 billion on revenue of 150 million? That's weird. If anybody has the answer to that, I'd love to hear it. All right. So Rivian, weekly breakout, retest, looking good on a weekly time frame. Daily view. Yeah, you got stiff resistance immediately above. So our alert is set here for Rivian. We have higher lows on price, RSI going in the right direction, Stokes going in the right direction. You're beginning to see momentum build. I'm just curious about the IV percentile here. What I'm looking at here, for those not familiar with options, I'm looking at how expensive or inexpensive they don't have the IV percentile. The options are. All right. Because that'll tell me if I want to be a buyer of the options or if I want to be a seller of the option. So without that data, I can't make that decision right now. So Rivian setting up nicely. I am bullish. DWHC, we've owned it twice. We made a good amount of money on this. Setting up nicely. We've retraced all the way back down to support. The problem is we have a lot of resistance immediately above. Weekly chart. Let's throw up the. I'm betting that we're gonna have some blue dojis here on raindrop charts. We do. We have a blue doji on the raindrop charts, and we have multiple on the candlesticks. Week 1, week 2, doji star formation. So what does that mean? What that means is that you have a lot of indecision. And when you have indecision, the general trend is probably about to either get tested, if not reverse. And what we did on a weekly time frame is that not last week, but the week prior, we broke out. We haven't retested yet. But on any retest down at these levels, I would be a buyer at around, if you see a 30 handle, 39 handle, it's a buy. But I would use a tight stop because this is a very volatile stock. We'll go to the stop in a moment. Stop loss right below the lows of the week of the 25th. That low was 33.25. Daily view. This is probably going to break out. Look at this tight consolidation. My guess is that we go up higher probably early this week on DWAC. Stokes rising. The only caveat I'm going to lay out here, RSI has leveled off and is flat below the 50 mark. That is a yellow flag on the track. You want to see that break out. The fact that it's not breaking out above 50 is a concern. We need to see a breakout above 50 on RSI. My ice cream is here. I got to blow through the rest. Boeing. Boeing's a buy. Weekly chart, bullish key reversal bar. Third consecutive week of we have stopped closing at new lower lows. Good stuff. Stokes flatlining. RSI rising. Daily chart. These are the automated trend lines. Click of a button. Don't forget, TrendSpider link below. 50% off, expiring tomorrow, I guess. We broke out above resistance. Boeing, a buy. It's going up higher. Oil. Oil. We have topping action here on a weekly chart. I would like to see a retrace back down to support. God damn it. Or I would want to see a breakout above 127 per share. The key is that you want to make sure it closes above that mark, right? If the alert fires off on Monday and you have 4 days left to go before you know it's going to close above that support level, that's a problem because that alert would have fired off maybe this week back here, definitely last week, and each time it was rejected, right? So you want to wait until as late in the week as possible, if not next week, and buy it on the retest of the breakout point before getting involved as a momentum trade. Daily view. The daily view looks good here. Now, if you're going to commit to using a tight stop right below the lows of the day of Friday, I'd be fine with the trade. But remember, where we have our alerts set on a weekly time frame and on a daily chart, where we have these automated trend lines, which are telling us you're going to have buyers, sellers above. Beware. Take note of them. Set your alerts up here. If you do buy, and let the system tell you, hey, listen, you just hit a resistance level. You may want to lighten up. Cal-Maine Foods. We own Cal-Maine Foods. The weekly chart, rock solid. We stopped going down. We had a bullish reversal bar. Now, you'll see here, we had an alert that fired off. Please support. We have one trading day left to go. We really need to break out big time here tomorrow to recapture that support level, or else what we'll have on our hands is a monthly breakdown, a breakout point failure. That's not good. If we gap up early in the first week of June and we close above $49 a share, I'll be okay, but I'll keep an eye on it all month if we slip back down below the support level and probably stop out of the trade. So right now, short term, it's looking okay. Daily time frame, nice rally last week. We're going to have resistance right up here at $49 a share. If you're looking to add to this trade, I wouldn't do it yet. I wouldn't do it. I would either wait for the end of business on the 30th. Have we closed above 49 bucks a share? If the answer is no, I would wait. See what June brings. And I'm an owner of the stock, but I'm not going to talk my book. So I would wait on this one. It's very volatile. Limit orders only. No market orders on Cal-Maine Foods. Spreads are too wide. LABU. Loving LABU on Stokes weekly time frame. I know the chart like the back of my hand. Stokes weekly time frame. They're beginning to break out, putting in higher highs relative, at least the fast line is relative to prior weeks. Now, where we're at on a weekly time frame, we're kissing the upper band of the downtrend channel. Would I buy more here? No, but what I would do is sell more naked puts. That's what I would do in this trade. Daily chart. Obviously, on a daily chart, we had a great week last week. We broke out above the upper band of resistance on a daily time frame. We closed up above the orange VWAP. Good stuff. Volume rose last week. So I think that the probability of us breaking out on a weekly time frame, very strong. So I would split this trade up. I already own the common here for this full disclosure, and I have naked puts on it. So I'm not going to add more to the common until we break out on a weekly time frame. I will, however, sell or roll up my naked puts. That's what we'll be doing. What else do I have? BA. Oh, we did BA. We did Zim. Zim's looking awesome on a daily chart. But first, let's take a step. Oh, be careful here. Be careful. This is why we always go to the higher level view charts first. Weekly chart. So what we're doing here is we keep rallying up and into this upper band of resistance. You have an inverted head and shoulders setup, if you can believe it, on RSI. Left shoulder, head, right shoulder. It's like a Rorschach test. And we have broken out above the neckline. We have not retested yet. I think it's quite possible that we do a test of weekly support this coming week. And we're set. We're good to go. Just keep in mind, you have resistance above. Again, folks, I don't draw these trend lines. The algorithm does, right? So keep yourself out of trouble. Use the automated trend lines. So we also have a lower band of rising support here, but I'd be okay if we retrace back down to the mid-range of this rising uptrend channel on Zim. Daily chart. Daily chart looks good. If you're going to commit to using a stop loss right below the lows of Friday, which was at 64.35, I'd be fine with opening a position. Add more on a breakout above, let's call it 70 bucks a share. Zim. AVYA. Two, three, four, five, six. A relative underperformer. The however is we have 6 consecutive down weeks. The probability of a 7th and an 8th in a strong market is probably improbable. So I think what's going to happen now is you're probably going to begin to see some consolidation here. Volume still rose. It was above average last week, and it's rising sequentially. That's a problem. Daily chart. I'm not loving this stock. I would wait until the back half of the week. Ask yourself the question. A, Have we stopped going down? Have we made new weekly lower lows? If not, then consider nibbling on a position and wait for a breakout. Right now, all I'm looking at here is a dead cat bounce. I don't know whether or not we have stopped going down yet. So, a warning flag on the track here. This is another one where, when in doubt, and you're at the low end of a trading range, and the probability of you making newer lower lows each week dissipates, or each sequential week, then I got to take a look at maybe selling some naked puts. And the options are very expensive. They're in the 96th percentile. Hell, I may be doing this myself. I would be looking to sell naked puts on Avaya. We're going to come back to this in a moment. I want to take a look at where we have historical support. We don't have any historical support below. We are at it, really. We are really testing the bounds here of historical support. We're below it. We're below it. I don't like this stock. I don't know their fundamentals. Let me just take a look at it. It's a short squeeze candidate. You have over 12% of the shares are held short. They only sell monthly options, no weeklies. We closed at 373. I like the premium. If you want the shares, I'd be looking to sell a $3 put expiring in 18 days. I collect a premium of roughly, well, there's probably nickel increments, probably about 35 cents a contract. So 10 contracts, you want to buy 1,000 shares, sell 10 contracts, it's $350. If they get put to you, they put to you at a steep discount. So that's one way to trade it. Otherwise, I'm not in love with this stock. You may get a short squeeze on the comment fairly soon, but looks like it's got a monthly breakdown that really turns me off. So resistance is going to be, if we do close out the month down below the support level at around $6.33 per share. Not a great deal of upside for buying the common. However, if you sell the puts, sell the naked puts, well, then you're getting a discount on the share price if they're put to you. So if you like it here, you got to love it down there. What else do we have? WLL. This is the last one I want to go over. Fighting Petroleum, monthly chart, awesome. Monthly breakout. Weekly chart, awesome. Weekly breakout. Look at the double bottom setup at the 50 level on RSI. You got to love that. This is going up. It's going up. It's coming up here. Just know you're going to have resistance at around $94 a share. It'll probably blow through that. But just be aware that it's up there. This is going up higher. You are welcome, Pete. Folks, everybody have a great night. Thanks for being here. Prayers to our fallen soldiers. Happy Memorial Day. Have a profitable trading week. And don't forget, TrendSpider, 50% discount this week. Use the link below. And everybody, again, have a great night and an awesome, profitable week. Be